And you're welcome to another 25 minutes of the only weekend business program, Capital Market, right here on Channels Television. I'm Ladi Williams. As usual, let's begin the show with a quick review of major global stock markets performance at the end of the week. Let's start now with major bourses. Now, the trading session was mostly mixed as traders assessed some economic reports within the week, along with corporate results as Q1 earnings season. That's gradually winding down at this time. On Wall Street, the Dow Jones Industrial Average closed Friday above the key 40,000 level for the first time in history, just as day after hitting that benchmark. At the same time, the S&P 500 inched up by 0.34%, while the Nasdaq Composite closed the day lower by 0.07%. In Europe, the indexes closed all in the red, snapping a 9-day winning streak. The UK's FTSE 100 index flopped by 0.22%, while Germany's DAX that fell by 0.18%, while France's CAC index that closed the day down by 0.26%. That's the biggest drop there in that region. And for the Asia Pacific, it was a mixed bag as China's Shanghai Composite popped a 1.01% gain. Japan's Nikkei 225 dropped by 0.34%, while Hong Kong's Hang Seng Index ended Friday with a 0.91% advance. And here in Nigeria, the NASD OTC securities market's performance ended the week positive as the index soared by 6.97%. Week to date, investors gained 110 billion naira. At the same time, the volume of securities traded this week rose by 15.16% to 72.91 million units, but the total value of transactions for the week that dropped by 3.85% to close at 1.92 billion naira, while the number of deals carried out was 252. Top three advances for the week are New Rest Nigeria, formerly known as Airline Services and Logistics PLC. We also have Aradol Holdings and Mixta Real Estate PLC. While the top decliners for the week are Central Securities Clearing System, UBN Properties, and AfriLand Properties. And at the domestic stock market, bearish sentiment persisted for another week as profit-taking activities intensified in 4 out of 5 sessions trading, particularly on the shares of Seplat and some big banks. As a result, the market's main index fell by 0.11%, bringing the month and year-to-date performance to 0.1 and plus 31.2% accordingly. So that 30% level still holding year-to-date gains. It's gone despite the moderate rebound recorded with the week, which was largely driven by about 9% gain in the share price of telco giant Airtel Africa. Sector performance of listed equities was largely negative as the industrial goods counter, that was a lone gainer among 5 key indexes. It was up just a tad there, 0.01%, quite marginal, with the biggest drop coming from the banking counter. In price performance, international energy insurance topped a list of 28 gainers with over 11% price increase. PZ Cousins led 50 other losers, down by 22.16%, while the trio of custodian investment, GTCO and Access Holdings company were the top 3 contributors to over 1.56 billion equities traded this week. Let's get to the first conversation now, get a sense of how the fixed income market performed this week. And in the first quarter, joining us now is Mr. Bankole Odusonya. He's the chief dealer at Polaris Bank, joining me right here in the studio. Great to have you.
Thank you, Ladi.
And quite a week. We got that inflation data this week, as expected. You know, it came out hot, but we've noticed some kind of deceleration, there. But let's talk about the bonds first. About 380 billion naira. That was raised in the Monday FGN bond auction.
Yes.
It looks like investors were quite keen on this one. But how do you see, the trade there?
They will be keen because the yield is very good. All the 3 securities that were issued by the Debt Management Office closed at between 19.3 to 19.89%, and that's very good yield on risk-free instruments. So we've seen a lot of foreign portfolio investors come for the shortest instruments, especially on the Nigerian Treasury bills, and then for the shortest bond 2027 to 2029. That's where we're seeing a lot of interest. Of course, they slowed down the last 2 weeks because of what happened in the FX space, where rates were not stable, moved back from 1.1 to 1.5 as we're seeing. But we expect more activity. And as per inflation that you spoke about, it's true that we're seeing a bit of deceleration, and it's possible that continues in the month of May. May's inflation will be released by mid-June, and then it dovetails into what we expect of next week's policy committee meeting.
Right.
We've had 2 this year already. There will be 1 in May, but we are thinking that the committee may want to see the impact of the last 2 actions that they took. And that's likely to close the first half of the year. Going to July committee meeting where further actions will be taken.
Right. It's been quite the first half, at this time. We'll definitely be looking out for some kind of soft landing, in the second half of 2024. But looking at this FGN bond, the amount raised is 39% lower than the month before. And what's that telling us, at this time? Are investors stepping back a bit? 39% drop there.
So I had mentioned earlier that the foreign participants slowed down a bit because of the volatility we had in the FX space.
Right.
We're still talking to them. We know they are still interested and they're likely to come. But on the local side, the Debt Management Office itself usually raises a lot of instruments in Q1. And that was even very deliberate this time around because rates were lower. Before Monetary Policy Committee hiked rates to excess of 20 and 22%, the Debt Management Office had loaded up on the deficit they planned to cover. Nigeria's budget deficit is 10 trillion, and we believe that by way of borrowing, they have done most of that. The central bank and then the DMO are still raising funds to securitize the 27 trillion.
That Ways and Means.
Ways and Means.
Right.
So that's ongoing. But as it were, they've done a lot of front loading in Q1. So Debt Management Office will issue 400 billion, 300 billion. Compared to the 1 trillion and 2 trillion we saw at the beginning of the year, we don't expect that to happen again.
Right.
So basically, that's what's happening in the bonds space.
Looking at the investment climate at this time, it seems inflation is what pushes that, gets yields up, and we see the fixed income market, getting all the attention at this time. So talk to me about, in a low, inflation environment, do you still see the fixed income market in Nigeria, having this much, action like we've seen so far?
Okay, so we expect action to continue in Nigeria because there are opportunities in the real sector. We have a lot of resources, human and material. However, of course, there are challenges on the electricity side and security. But all that is on the front burner of this new administration, as we hear. And we expect that going into the next half of the year, the more of the action will be seen from the fiscal side. You can see what happened with the cyber security charges attempt, and then the suspension of that, and then also the resumption of cash management charges also, and the suspension of those. So we're going to see a lot more action from the fiscal end, from the Ministry of Finance and various agencies that work with them, especially with trying to assist small and medium scale companies. Of course, we are seeing that 50 billion has been budgeted for student loans. We expect that something will be done for the SMEs also as a means of palliative. Given what we have seen with power price hike, petrol subsidy removal,
right,
and a lot of pricing, instability that we are getting. So there will be some more action from the fiscal side. We are expecting some more action on the fiscal
so much at
the
this
monetary authorities have done a lot in Q1.
Right.
We expect a slowdown a bit to watch impact going into H2.
So what would a lower action look like from the MPC at this point? We're already hearing that they might get maybe 100 basis points, maybe 200 basis points. What do you think? Is 50 out of the cards at this point? What about 50 basis points?
It's possible. It's possible. We don't know what they're seeing. They see more than us. But at 24.75, they could go to 25 or move CRR from 45% to 50. We do not see a huge leap like we saw when they did 200 basis points for now. we're seeing, like you said, maybe 50 basis points, something modest,
right,
to watch the impact of the actions on the markets and then expect more action from the fiscal authority.
How much wiggle room do you see, with the MPC at this point? What's the peak MPR rate?
It depends on the situation at hand,
right,
with inflation, and then the level of volatility or challenge, scarcity, paucity of fund we are seeing on the FX. I can confirm to you that the FX market is more liquid. However, the supply chain expects, they've tested 1.9, 1.8, and then market went to 1.1. Right now we're at 1.5. We're happy in the market because we found some stability at 1.5 for the whole week. There were weeks where we saw movement from 1.2 to 1.3 and 1.4. But last week, all through 5 days, we saw 1.5 hold. And that's what we're praying for. Stability helps us plan locally, and then the international participants can come in to say, okay, that's it. 1.5, and this is going to stay for a while.
So we're seeing some kind of peaking,
we're seeing some equilibrium, where the demand side and the supply side are okay and satisfied. We're not happy at 1.8 today and then 2 weeks' time at 1.1. You can't plan with that. Most big tickets will not want to come in at that level. But if we can find equilibrium, stability at 1.5, then we can start. Everybody can plan around, okay, I want to sell here. I'd like to buy here. Okay, I want to wait a bit,
Because at the end of the day, when you see all this volatility, in the FX market, we've seen how that's impacted the customs rates. At this point, we keep getting different rates.
Yes.
In that part. But looking towards the end of the year, looking at what we've seen so far under President Tinubu's administration, how would you describe what we've seen so far in the fixed income market under this present administration?
A lot of action has been taken to reverse a lot of anomaly we had in the last administration, where there were excesses from the monetary side. Right now, we've seen a lot of policies correcting most of those actions or inactions. So what we're expecting right now is that we want to see the impact of what you've done. We don't want, the market is not expecting further action with policy for now. On the fiscal side, we're expecting improvement on revenue. Of course, you've seen how
we saw Q1
they
revenue.
tried to
it was quite
increase taxes here and there. And then the administration has also spoken about reducing wastages, the number of people traveling with the president or any cabinet member and all that. So we are seeing action. And then the administration also has shown responsiveness, where there are complaints within a week, we see suspension of policy. So compared to what we used to have in the past, where if it's announced, it's announced.
But sometimes I wish, sometimes that maybe we did some kind of testing before coming out with this policy, so we don't have to bring it out and take it back, again.
We wish for that also, so you can plan, so you don't disrupt the system and then, reverse it. Because we are not just, Nigeria's market is large in Africa, sub-Saharan Africa. We're at the level where, if you're discussing Egypt or South Africa, we shouldn't be putting out policy and then reversing it. It's not good. It's not healthy. So, like you said, it's good that we do some kind of sounding out with various, sectors, like with, for instance, the banking committee. If they've had a discussion with the banking
before
committee,
getting the circular out,
issuing the circulars
right.
out. So we'd expect, we will hope for some more roundtable.
Right. Okay, what are you expecting for trade next week?
For trade, are you talking of the equities market?
Fixed income market, basically.
Fixed income market, we're expecting Nigerian treasury bills to happen. We do not expect huge volumes this time around, and we expect rates to stop at where it stopped in the last 3 auctions. 16, 17, and 20.7 for various instruments that will be offered. Basically, the DMO is simply just replacing what is maturing on the NTB. They are not issuing more. So like I've said, I think they're on the right track of covering the 10 trillion deficit, which is at hand, and then probably try to securitize a bit of the ways and means, not all of it within 1 year.
Not all of it. Yeah. Definitely, we keep tracking that ways and means. That's another huge bone of contention. But thank you so much for coming on, Mr. Bankole Dusonya, Chief Dealer at Polaris Bank. Thank you for sharing your weekend with us here.
Thank you, Laddie.
Welcome back. Well, first quarter earnings are gradually winding down. Let's look at earnings in The services sector, listed companies. Join us now, Mr. Ambrose Amordian. He's the Chief Research Officer at Invest Data Consulting. Also joined me right here in the studio. Great to have you. Quite interesting Q1. We've seen a couple of results so far. We've seen the ones that have been impacted by, the currency devaluation at this time. So talk to me about, the ones that stand out for you.
Actually, we start from the banking sector. I think they are still leading the market in terms of performance. And people say...
And leading the market down. With the all-share index, with that major correction. Some say it's a bear market, but some say it's a correction, I guess.
Yeah, it's correction. Yeah, because it's not, for me, just for pullback and also rebound.
Right, because it was still 30% up for the year.
But I believe that the banks have given us direction where they are going, despite the capitalization plan that is on ground. But for the time investor, this is a time you look at, if you not invest in the market without having banking stock in your portfolio. I said last time I came to this program, if you remember, what I said is that, yes, we have seen their first quarter. Give you insight for the year. And also, monetary policy is not going to stop rate hike tomorrow. As far as the hiking rate, the banks will still raking more money. And also, with the holding structure these banks are pursuing, it's for a purpose. It's not just because they love you or they love me. It's for a purpose they are pursuing the holding structure. Don't forget that during the time of Soludo, when they were having a universal banking license, they have all these subsidiary around them. And they had a successful capitalization that year. Also, banks are going back to that before they start their capitalization. Most of the banks, Zenith Bank is just trying to put its own before he hit the market with his own. Others are there. Also, if you look at GDP result, the holding structure have represented their results also. Like all guys are on first holding, FBN holding to see what. But if you look at also Stanbic results, you are still in part of holding company, because the impact of the insurance earning alone on that number shows that because the branch into insurance last 3 years alone, it's also impacting their numbers already. And if you guys see when you see Sterling Bank going to Sterling Bank going to holding company, you know why they are going there, because they know that this area that you can do other business that will impact your bottom line. But the good thing is that look at the top line of the Fugas. The one that hit their first quarter, because none of this bank result is below 3 Naira as earning per share for first quarter of the year. And most of them post 3 Naira for a full year in previous years, 5 years ago or 3 years ago. But now, first quarter, you are seeing bank like GT post almost 16 Naira. Zenith Bank, 18 Naira 90 kobo. What's it called? UBA, almost 4 Naira, and Access almost 4 Naira. For first quarter, that means for first quarter, I can say for Zenith Bank, we spend around the end of the year, 25 Naira at the end of the year, or around the 14 at the end of the year. For me, that is that even though they increase their share in issue, the capacity of kind of sustain their earnings is there. And also, if CBN, like I said, they are not going to stop rate hike in the near future, let's say next week or that means this bank also at the end of second quarter, they're going to also post the total number.
Because we see in the US, even though they're nearing their inflation targets at this time, it's still hard getting the US Fed to actually cut rates. At this time.
No, they have said earlier that for me, I must use the economic data to take my decision. Now you have seen that inflation have slowed down, but you see that it has not hit the 2%. It's target. That is its own position. But for here, we just see a slowdown in our last inflation that came this week. That let's slow down, but we cannot say inflation in Nigeria is slowing down, because I'll tell you that at the end of May we know where we're going. It's because we saw some appreciation in Naira and people now slow down. Price came down little the month of April, because as from late March to early April, we're seeing dollar coming as well as almost 1,200 before coming back again. That also reflected on some goods. People also have to bring their price. That was just saw that later. And also, despite that it's an off harvest season, we're still saying that. For me, I believe that it may tell us where we are going. At the same time, the good thing is that for those that are in banking stock, what I mentioned is that don't forget that most of the money Fugas paying 3 dividend from end of half year. And look at their first quarter result alone. And also they are retaining earnings that is not part of their new capital structure. They are not sitting on heavy money. Retained earnings of Zenith Bank is about 1.4 trillion. What of assets price is about 850 billion, and GDP is about 930 billion.
Even though they can't use that for the recapitalization.
Yes, not they can't use that. And also
but they have a war chest.
And also, no, their first quarter result that if they are at end of Q2, we are seeing the impressive number. With their retained earnings, they can give you a good dividend. No, don't forget that last year we saw a shift from 30 kobo to 50 kobo. It's possible that from 50 kobo we've seen 80 kobo 1 Naira. That will also give investors more confidence to come back and invest in these banks.
All right, looking at the banking index, at this time, it was over 1,000 points, before the correction started. Now about 700 level. So I'm wondering, where do you think the bottom is for this banking index?
If you look at the weight of the Fugas on that index, when the figures are correcting, you feel it that when the second-tier banks are correcting. Now, I believe that once we start seeing they are closer to the end of the quarter, by in the last 2 weeks, we are entering the last month of the second quarter of the year. That means we're approaching the second half of the year. So at the same time, investors that know that all those first-year banks pay what interim dividend, they start positioning. And also, most of them are just telling, like Stanbic just say, I'm going to do 550 billion, new capital. Then for Zenith Bank, we are coming to see around 800 billion or 750 billion, addition. That means almost a trillion. If they have already 270 billion already, and now they are going to raise about 750 billion, that's about a trillion. That means that these banks are really trying to solidify themselves. Even by tomorrow, we are seeing a lot of correction of activity. They are not shaking because they are solid enough. For me, it's a good one. Even CBN also have indirectly put another policy to pull out all the money in circulation back. Because for you to say, bank, don't use your retained earnings, go to the public, go to everywhere, bring this money back to the, also. For me, this is a way of making our banks stronger. Also, at the end of the day, now impact on the economy. Only that CBN should also start relaxing so that the economy can benefit from it. Because if you're having high interest rate, the economy has to move. Not because if I can't go to any bank now and collect a loan of 32% to run my business. Because of you want to checkmate inflation. You need to balance it. That is why in China, we saw that China, they know that they want to drive the economy, they reduce their interest rate. And so also government is also injecting funds to stimulate the economy. They know that without the economy, there's no nation. Now you always will be wrong. That is why even though you want to let's have stable exchange rate, fine, but let the economy run because it's the economy that oil the whole thing. If the economy is not running, your policy for me is not effective.
Exactly.
Even though we are praising you, clapping your hand, but if business are closing down, unemployment is on the high rate because at the end of 1 year in this office, in this government, we need to ask, okay, what has been our unemployment rate? Has it improved or not? Okay, what is our poverty level? We want to know this because if policy is working, also I know that here is not overnight that's the impact of the policy, but we should look at assess the economy.
Want to see some kind of improvement with the scorecard, with most of these macroeconomic indicators. Well, let's look at some delistings, delisting requests right now on the NGX. The latest kid on the block is MRS Oil.
Yeah.
And they have declared, they've set 135 Naira per share as exit consideration for the delisting. How do you see investors, reacting to this?
No, I think investors should not be surprised hearing such because every stock on the exchange is free entry and free exit.
Right.
Once they are saying they are going, how can we partake on that exit? Because the day they came in, we were doing at the first and they came on their own. The day they are packing their load and leaving the market, they will pack their load. But the good news is that before you leave the market, compensate your shareholders, and which was seen in light. That is why we call the attention of Owando should look at what this Emirates is doing. If really they are serious to go, they should pay investors good money to go. But I believe that the way Owando is going now, I don't see them leaving the market because Owando should play the role of what stapler. So you can see that Aradel in the OTC market is doing excellently well. And they are the same crude oil business. We expect that Owando at this time should look at all these numbers and see that these companies are posting better numbers and also emulate from them. We need Owando to be transparent so that investors can put more hope because this is a company that has stood aside almost 280 before now. Coming down to almost 2 Naira, 3 Naira, coming back now around 16 Naira. We need more results to boost confidence and people to invest in one. For me, that's a stock that investors in the market should watch. If you are seeing Seplat at almost 3,000 Naira, rather in OTC almost 3,000 Naira, if Owando should put their house together, it's also Owando less than 200 Naira in the next 1 year.
So this MRS, this number, 135 Naira per share for MRS, that's good.
It's good. It's good.
Investors are okay.
No, it's good. For me, they move from as low as 40 Naira to this price, and they are paying you at this time. But for me, that they want to go into merger or business with Dangote, and for going to such big business, you need to be listed. So that transparency will be shown. But now you are going. It depends on the shareholders if you approve it. But for me, if you are going to go into business with something like Dangote Oil,
you should be listed.
Yeah, it should be honest so that it will be transparent between you and so that people now are more comfortable. It's a choice. I say free entry and free exit.
Okay, what are you seeing for next week? Now, some say another bearish, another correction for the NGX all sharing.
Yeah, okay, for me, it might be, but I expect to see a mixed market. Because already we are seeing investors taking advantage of the pullbacks to take position into value companies. Because when you see pullback, you buy into them. We saw the life of Zenith Bank moving as high as 47 down to almost around 32. Once around 30, 28, you jump in again because they are dividend is around the corner. Also for stock like UBA, and also stock like call it NACO. NACO is in the aviation industry, and it's a leader there. It's a company that paid you 2 naira, 54 kobo for 2023, and the people they paid you 1 naira 20 kobo. You can see that from 1 naira 20 kobo in 2022 to 2 naira, that is almost 100% increase for that. And their first quarter earnings show where they are going. As an investor, if you are really into dividend game, this is where you start investing. Now it's not as high as 37. Now it's come back as almost at 30 now. Around that 30, start buying, because I don't expect that company around 20 again.
Right.
Because the first quarter I've given you an indication where they are going, a sign where they are going, a signal where they are. For me, this is how to invest. Don't think until the stock, what I say, the stock market is bearish. This one, you know why you're in the market, because you have different objective. Trader like me, I say, oh, let me hold my cash. But investor, take advantage of pull back and buy more. But investor, look at where the return around to buy so that we cannot make.
And with the cost of living crisis, you definitely hope those investors have money to come back into this market.
No, this is period
or
of
come into this market
period of dividend. As you are any dividend, don't eat all your dividend. I know that the economy
don't eat it all.
Yeah, I know that the economy is there, but invest part of your dividend back to the market to grow your capital. That's why you are an investor. Or if there are any dividend, you are, for example,
the richest man in Babylon will say,
yeah,
don't eat all your.
Exactly. That is the game.
All right, thank you so much. It's great having your perspective, Mr. Ambrose Omodians, Chief Research Officer, Invest Data Consulting Limited. Thank you so much for coming out. All right, that's the show. Remember, you can watch us again on our YouTube channel, and you can also get more investment tips right here on Capital Market. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.